Hello everyone, this is Edwin Epperson, your host of The Sophisticated Investor. The Sophisticated Investor is an incredible community which is focused on education, training, and collaboration to help each of our members, and that includes you, to build, protect, and preserve your family's generational wealth. Now, I believe that we truly have a unique and one-of-a-kind educational community. For one, I believe that there are 4 primary markets, not just one. I believe that those 4 primary markets include your personal finance and mindset market. I believe the second market is your hard, tangible asset market. I believe that the third market is your stock and paper market. And I believe the fourth market is your business investing market. Now, those 4 markets are imperative to be able to understand and then call yourself a sophisticated investor. Today, we have an incredible guest who is going to educate us on their preferred market of investing as well as the assets that they like to invest in. Please join me as we welcome today's guest. Hello, investor. This is Edwin Epperson interviewing Edwin Epperson. Today will be the very first podcast. This will be an introductory introductory podcast to The Sophisticated Investor. You can watch us on YouTube as well as if you're listening to us right now on Google Play Music, iTunes, Stitcher, or Spotify. You can, of course, go to YouTube and type in The Sophisticated Investor. You'll find us with our very upfront black and gold icon, and then click on there and you'll see the intro video, which is this video. So I wanted to cover today exactly what is the sophisticated investor, what is it that I believe in, and what is it that I'm trying to teach you, my listening audience, to help you become sophisticated, and why is that important? So first off, I think it's very important to define what is a sophisticated investor. Now, there are 2 websites that I've pulled 2 definitions from for sophisticated investor. And this only goes to show that even people that are in this space, sometimes I have a hard time of defining what makes somebody a sophisticated investor. However, I believe that these 2 definitions, one being the confusing one, which you'll understand where it's coming from and why it's confusing. And then the other one, which is much more clarifying, but it begs the question of, well, then what makes somebody sophisticated? So the first definition I wanted to cover is actually found in Investopedia. It's a very common encyclopedia for investors, if you will. And they actually have a sophisticated definition as this. A sophisticated investor is a classification of investor indicating someone who has sufficient capital, experience, and net worth to engage in more advanced type of investment opportunities. They go on to say, a sophisticated investor is a high net worth investor who is considered to have a depth of experience and market knowledge that makes them eligible for certain benefits and opportunities. Now, I will let you know right now, Investopedia is wrong. They are absolutely wrong in this definition. Why? Because they are confluting 2 different definitions. Accredited investors meet a financial metric. That means they have to have a net worth in excess of $1 million, excluding their personal residence, or they meet an income definition of $200,000 the previous 2 years and expected to make $200,000 next year if filing singly. If they're filing jointly with their spouse or a significant other, then they are expected to make $300,000 the previous 2 years as a household, and they are expected to make $300,000 the following tax year. That is the definition of an accredited investor. Sophisticated investors actually have nothing to do with the financial metric. I want to make that clear. Being a sophisticated investor has nothing to do with how much your net worth is or your income. So in this regard, Investopedia is absolutely wrong. And they are steering people clear of wanting to become sophisticated because the first thing in people's mind is, well, I don't have the money. I'm going to throw this out the window. So I want to bring to you a second definition of sophisticated investors, which I believe we hold true to in the sophisticated investor community. This is brought to you by the Business Professor. I will have a hyperlink to both of these in the show notes. You can read up for yourself. A sophisticated investor is this, according to the Business Professor, which I agree with completely. The Act of 33 makes a second distinction regarding the ability of an investor to purchase securities in a Rule 506B offering. So we'll cover 506C, 506B offerings at a later time. I just want to let you know that there are two financial metrics. You can either be accredited or non-accredited. If you fall underneath the non-accredited space, you have to be what the SEC considers sophisticated. That is where my focus is teaching people how to become sophisticated. Now, that being said, even accredited investors, and I've met plenty of them, doctors, attorneys, business owners, they are experts in their field of craft. They understand their business, their whatever it is that they're doing in their career. They understand that ins and outs, and they've many times gotten to college and have incredible degrees from incredible universities. That does not make them sophisticated. It may make them accredited, but it does not make them sophisticated. And I have found a lot of accredited investors who have no clue what they're doing. And I have found a lot of non-accredited investors who are sophisticated with their investments. And that is my goal, is to teach you, regardless of which financial metric you fall under, whether you're accredited or non-accredited, whichever financial metric you fall underneath, according to the SEC, I want you to be sophisticated. Here's a definition. A sophisticated investor must have sufficient knowledge or acumen to fend for himself or herself in a financial transaction. That's it. You have to have the knowledge. You have to understand what you're investing in. And so that is the purpose of the sophisticated investor, to help you, our listening audience, build, protect, and preserve your family's generational wealth. So now it begs the question, well, how am I going to do that? Well, number one, I firmly believe in teaching and educating. When I was in the military, I was a Green Beret, and part of our biggest mission was to go into foreign countries. It was not to overthrow the government, to go in and snatch and grab, or to take out targets, though we did do that. Our primary focus was to go into a foreign country, and we would train their local forces, whether police, whether army, Marines, it did not matter. If they were a combat force, our goal was to go in there and train them. So I am very big about education, teaching, and training. So how I believe that I can help you become more sophisticated is by teaching, educating, and collaborating with you, the listening audience, to help you build, protect, and preserve your family's generational wealth. So how we are going to do this is actually very simple. Number one, I'm going to explain to you and teach you the four primary markets. I believe there are four primary markets. One is simply mindset and being able to dedicate time to learn, gain education, gain knowledge and understanding. The other three are simply financial markets. So I want to teach you the four primary markets, and then I believe that through teaching, education, and collaboration, that I can help you begin to invest into each one of those markets. Now, what you are investing into each one of these markets is your time, your talent, and your treasure. Now, the personal market, which is your personal mindset, your personal finances, that's not really a financial market. Most of that is going to be your mindset. It involves the time. You have to dedicate time, because that's where you're going to gain the information, knowledge, and understanding of the three financial markets. You also have to dedicate your talent. You have to find what you're good at within those three financial markets, and then really excel in that one category. However, I want you to be aware that there are two other financial markets that you can invest in. And what's even more important is finding those very few, very rare assets that transcend the one individual market that asset may be classified under, and that asset touches multiple markets. And I'm going to teach you how to identify those assets, and those are the assets that should be the foundation of your investment portfolio. So what are the three other markets? Well, we covered the personal mindset and personal finance market. So that's your personal market, okay? That's not a financial market. That is a time and a talent market. So you have to dedicate time out of your busy workday. That means instead of watching the football on Saturday, you're going to be studying and learning about an investing strategy that you've learned through one of the podcasts or learned through our newsletter. Instead of, wasting time watching TV or going out into the bar and drinking or whatever it is, you're going to have to dedicate time to your investment strategy. But once you dedicate the time and the talent, then you're going to be able to accurately and effectively invest in the financial markets. And those three markets are your hard and tangible asset market, they are your stock and paper market, and they are your business market. So those are our three financial markets. Now, what am I going to do in the Sophisticated Investor podcast, as well as the newsletter, to help you build and gain education, knowledge, understanding on each one of these three primary markets? Well, number one, I'm going to do that by interviewing investors that are actively investing into each one of those markets, and then identifying, drilling down to the actual asset that they invest in within that market. When we dive in, we're going to ask them questions. How do you identify the asset that you're going to invest in? What are the key metrics, the KPIs that you're actually looking at in that asset to determine whether that's a good investment or whether it's a bad investment and that you should pass it on? On top of that, we're going to interview licensed professionals in these realms, in these fields, to show you who you should have on your team so that you can then go out and make those wise financial investment decisions. Now, all of this is great, and I'm going to interview a lot of different people. Matter of fact, the first 13 interviews are going to be investors from all three different financial markets, and they're going to be talking about different assets that they invest in those markets. Honestly, it can be a little overwhelming. But through all of this, I want to share one primary thought. There is an investment asset, okay? An investment asset that actually touches multiple markets. Those are the assets by which your investment portfolio should be founded on. Having those assets in your investment portfolio is absolutely key and critical to truly having a diversified portfolio, being able to spread out your risk across multiple markets, not just having your investments in one asset within different markets, but actually having an asset that transcends that one market and touches the other financial markets. Now, through all of this, I want to show you that one asset that I believe can do this. This one asset allows you to cover your downside. It allows you to control and then mitigate your risk. That means you can put protective measures in place to protect your investment. And then as you control and mitigate that risk to something so small and compact, the existing risk that exists, whatever's remaining, I will show you and teach you how to shift that risk and push it off on someone else so that they assume the liability and responsibility of your investment. And then I'm going to show you how to maintain the rights and the control of that investment while that other person assumes the liability and responsibility of that investment, of your investment. And by doing this, I'm going to reveal to you one of the most powerful wealth building foundational strategies that the wealthy families of America and the world over have been using for millennia. So this one investment strategy, you may be thinking, well, I've never heard of such an asset. I've always been told invest in this. If I'm focused on growing my portfolio, then I need to be invested in blue chips and I need to be invested in EFTs, maybe some commodities, maybe foreign stock or foreign companies. Well, I believe, honestly, that the American people, the hardworking Americans like yourself, have been duped by large financial institutions. You see, these large financial institutions actually control the majority of the investments available to the general public. And they have restricted those investments to one market, meaning the stock market. That's great. I have nothing against having investments in the stock. You should have investments in the stock because you should have investments in hard and tangible assets, as well as you should be investing in businesses. What I have a problem with is that a lot of your CPAs, your CFPs, certified financial planners, your advisors, your registered investment advisors, they are typically captive agents. Now, what does that mean? A captive agent is somebody who works for a large company and they are not independent. And even some of your independent brokerage firms, your independent agents, if you dive into what they are actually offering, it is all tied inside of one market. Very rarely will you find a registered investment advisor, a certified financial planner, a CPA. It does not matter. Very rarely will you find somebody that says, well, this is what our company offers, but I would also recommend that you invest over here, which is something that we don't offer, and invest over here, which is something that we also do not offer. Why? Because they only make money when they manage your money. If you have $1 million sitting around in an account and you go to an agent for Raymond James, Charles Schwab, you name it, and nothing against those companies. Hear me now, nothing against those companies. But if you go to an agent that works for that company, they are going to try to sell you every product, whatever it is that they have to offer, but it's going to be what they have to offer. They are not going to encourage you to take that money out of their control and go invest it in somewhere else. Why? Because they don't get paid for that. And if they have the opportunity to manage $1 million of your dollars instead of only 500,000 or instead of only 333,000, that's much more beneficial for them to say, hey, listen, Mr. or Mrs. Investor, you want to be more diversified. You are lower on the risk scale. Well, we have these dividend paying stocks that can provide you income. We have these bonds and T-bills. We have these blue chip stocks that are very low on the risk level. Oh, Mr. or Mrs. Investor, you want higher returns. You want higher growth potential. Well, we have these EFTs and we have these foreign stocks and we have these pink slips. I don't know if any investor or advisor is advising investors to go into pink slips, but they will say whatever the product is that you're looking for as long as their firm holds it. You will not find an advisor that advises you to go and invest into other firms or other assets within other markets completely. Why? They don't get paid on that money that leaves their control. Now, some of you may be thinking, but I'm not a professional. I've never gone to college. I don't have a license. I've never been educated. Perfect. That actually means that you're in the prime position to absorb information and knowledge. And let me tell you guys, this is not hard. They make it seem super complicated. They throw all these high-tech words and this and that, and it's not that complicated. It is really not. All it takes is a little bit of time and effort on your part. But guess what? You can learn how to invest in multiple assets in different markets however you want. And once you start to learn and once you start to transform the way that you think, again, that is why the personal mindset and the personal finance market is so powerful and very few people invest in it. Let's be honest. Until I started investing on my own, I simply listened to my advisor's advice. I was in the military and I had a TSP, a thrift savings plan. I simply put money in my thrift savings plan, called my financial planner, my financial advisor, and they said, yes, your funds are diversified in several different mutual funds, and we have some high risk and low risk, and overall your average return is XYZ. But I had no clue what I was doing. And because I didn't have a clue, I was simply satisfied with giving my money to them and really taking it on the chin as far as helping my portfolio grow and be diversified and protected. Now, one of the things that I want to give you for free, this does not cost anything and there's no gimmick attached. It's simply a white paper. It's something that I wrote explaining the difference, the deception of passive income. Now, this is really where my passion is passive income. There are a lot of investments that are equity-based. They are growth-based. They're growth-focused. I prefer to focus on income. If you are investing in income-producing assets, you can replace your active income. That means the time that you expend every week, every day of the month, that time and energy that you expend to produce income, you can replace that with income producing assets. That doesn't take a time or any energy out of your wallet or out of your energy bank. Matter of fact, the investment asset that I teach people to invest in is what I prefer to call a file cabinet money. Because unlike mailbox money and file cabinet money, you don't even have to leave the comfort of your house. It literally is in your file cabinet. Mailbox money, there's a little bit of activity necessary to invest in mailbox money. And that brings me to another point. I want to be clear that there are actually 3 different types of investors. And so listen to me clearly. I believe there are 3 different types of investors, and you will fall into one of these categories. Either number 1, you want to be an active investor seeking active investment income. That is somebody like a day trader. They go out, they're actively involved, they're analyzing. That's like a full-time job, right? Like they are full-time in it. They understand their market. They understand their asset classes. They know everything about that. That is typically who we see, and we're like, I don't want to do that. I've got my own business. I've got my own career. I've got my whatever you call it. I don't have the time, nor do I have the education or the knowledge to be an active investor seeking active investment income. And I agree with you. It is a full-time career. You cannot do that as well as be a doctor. You cannot do active investment with active income and also run your own business. It's not possible. You will burn yourself out. So the other style of investor, which I'm sure you've heard, is the passive income investor. However, I personally believe that there are 2 categories of passive income investors. Most people have been duped into thinking they are a passive investor because the income that they get is passive income. However, it is not passive. And unfortunately, real estate is the most touted, hey, this is the asset that you should invest in for passive income, but it is not passive. Then the third category, which I truly believe offers passive investors passive income, P&P. That is the creme de la creme. It is the golden, whatever you want to call it. That is what the golden egg of investing. People want to be passive, truly passive investors earning passive income. The other one, such as real estate, people think they're becoming passive investors, but they're not. They may be earning passive income, but they tend to fall on the active investor side. And so what you have are investors, maybe like yourself, who have invested in real estate thinking it would be a passive investment. When reality hits you, it's more active than you ever thought. The income's passive. You're not technically having to do anything for the income, but you're having to keep up with maintenance. You're having to manage tenants. You're having to manage toilets. It's a nightmare. It can be a nightmare for those people that were thinking it was something completely different. Believe me, I know. So there are 3 styles or 3 methods to investing. You have active investor seeking active income. That's AA. We have active investor seeking passive income, AP. Then we have passive investor seeking passive income, PP. I am going to teach you how to become PP. This is the type of investor that Robert Kiyosaki in his Rich Dad, Poor Dad series talks about. This is the investor, the I in the 4 quadrants. This is the I. Everything else falls outside the I. And I want to show you that one asset that I believe can provide that PP methodology to investing. So I've been going at great lengths to explain and lead up to what is this investment strategy that I'm talking about. How can I become a passive investor seeking passive income? How can I control and mitigate my risk? And then anything outside my control, I shift over to someone else's liability and responsibility, and they're paying for the protection of my investment. I mean, that sounds incredible. Well, this investment method, this investment strategy is actually based on one of the most successful business models since the beginning of time. If you look at the skyline of any downtown major metropolitan area, you're going to see these giant skyscrapers. Now, inside these skyscrapers, or rather, should I say, on these skyscrapers, you're going to see names. You're going to see big names written in probably huge letters going across the front of these buildings. And it's typically names like Bank of America, Wells Fargo, SunTrust, Chase. The list goes on, and these are huge institutions which we know as banks. Now, the banking industry has actually been around, like I said, since the beginning of time. However, in the United States of America and in many other industrialized and high-tech countries, there is something that is so unique about the banking industry. Number one, the banking industry, the banks control the rights to the assets, but they do not assume the liability and responsibility of those assets, as well as the laws of the land protect the bank's rights and protect the control that the banks have over those assets. Listen, the reason that this is so revolutionary is because you and I partake in this investment strategy all the time. However, we're never on that side of the table. We're always on the borrowing side of the table. For instance, if you go and you get a loan for your property that you and your family live in, if you do not pay your insurance, who can come in and take the property right out from underneath you? The bank. If you do not pay your interest and your mortgage and your taxes through the bank, if you have your taxes being collected through your lender, or if you don't go and pay your taxes at the local county and you owe the bank some amount of money on your property, who can come and take that property? The bank can. Listen, this is a proven business strategy, but most of us have never played on the other side of the table. And the banks have this figured out. Listen, if you go in and you go to a bank, you're going to buy a piece of property and you're going to sign your name on a piece of paper. You're going to put your hard-earned money as a down payment. And then the bank is going to say, okay, Mrs. Borrower, these are our rules. And you have to play by our rules. Guess who makes the rules in this game? It's the bank. It is not you and it is not me. It is always the bank. The bank makes the rules. What I want to show you, what I want to teach you is that game you and I can play. Not only can we play, but the laws of the land actually give us the ability to participate, to play the game from the bank's side of the table. Meaning we get to make the rules that somebody else has to play by. We get to control and mitigate our risk to such a degree that we are insulated, that we are protected. Our investment is secured to a real piece of property, and then all that existing risk that is out there, whatever it is that you deem as being a risk, you have the capability to push that into somebody else's lap, and they have to assume the liability and responsibility of your investment. Also, just like the banks, they make you go out when you're going to buy a property. They're going to make you go out. They're going to make you get inspections and appraisals. They're going to have real estate agents and title companies and attorneys. They're going to have all these licensed professionals to help them make that loan. Guess who actually pays for all those services? You and I do. Well, when you begin to play on the bank's side of the table in this investing space, you get to do the exact same thing. You can tell the borrower, the person who is coming to you to borrow your money and secure your money to their piece of real estate, you can tell them, you can make them pay for all of the licensed professionals, however many you choose. If you want to go out and you want to get 5 different appraisals on the same piece of property, if a borrower is willing to pay, then you can make that happen. That's what makes this investment strategy so unique, is that you can put whatever protective measures in place to make your investment as safe as you possibly can. So if you have not figured out by now, what I am actually talking about is private lending. Not only private lending, but private lending secured to real estate, meaning that your capital, your loan is collateralized to a piece of real hard, tangible assets. Now, if you heard me, and if you remember the four primary markets, here are the four primary markets. We have the hard tangible asset space, or the hard tangible asset market. We have the stock and paper market. Well, a loan is a piece of paper. That's actually what we call a paper, a promissory note, and it is secured to hard tangible assets. This one asset, this one investment allows you to touch two of the three financial markets. And I promise you, because this is such a unique investment strategy, you're going to have to play in the personal mindset space because you're going to have to learn about private lending. But it's not complicated. Matter of fact, it's so easy. A child could do this. And it's not to insult anybody. It is really that easy. Why? Remember, you have all of these licensed professionals that have gone to college for decades, maybe not decades, but they've spent a lot of time in college, and they're all working for you. Think about the power of that. You do not have to have any college education. You don't have to have one degree on your wall. And yet with this investment strategy, you can have licensed professionals who have gone to college. They have spent thousands of dollars in education and licensing and sitting before ethics committees and making sure that they can conduct their business in a professional manner. You get to leverage them, and they work for you, and somebody else is paying for it. This is incredible. There is no other investment strategy out there at all that allows you this type of power or this type of control. So as we wrap up, what is the sophisticated investor? It is simply an educational community, and an educational community that I believe very firmly in teaching people about private lending secured to real estate. And we're going to dive into this more. You're going to have incredible guests coming onto the show. You're going to get some incredible information in different markets. So you're going to hear guests that invest in different markets, different assets within those markets. You're going to hear a lot of stuff. Just know that in every one of these cases, the one thing that I truly believe in is private lending is a foundational aspect of everyone's portfolio that everyone can partake in. If you haven't signed up for our newsletter, please do so. The newsletter will be sent out. I'm going to have incredible information, updates. I'm going to give you market information. And in the newsletter, you're actually going to get training videos about how to begin setting up your private lending investment strategy. So in teaching you how to set up your investment strategy, I'm going to show you the key red flags that you need to look for within a loan, because making loans does have risk. I'm not saying that it's risk-free. It does have risk, and you can lose your money if you are not smart. I'm going to show you what red flags to look for. I'm also going to teach you how to build out a protective policy, protective procedure, and by which you can take your investment loans through this policy and procedure and know that you are doing everything you can to mitigate that risk. I'm going to show you how you can utilize technology to help you reduce that risk and how you can streamline this process. I'm going to show you how to look at the market, what's going on in the market around you, so that you can make wise, informed decisions about your investments. And then lastly, I'm going to show you several incredible key components that allow private lending to actually generate and perform in such a way that the risk is way down here. Imagine close to the risk level of a bond or a T-bill, that level of risk, and yet it is generating double-digit returns for you on an annualized basis. What am I going to show you? I'm going to show you the power of collaboration. This is extremely powerful. There is nothing as powerful as collaborating with other investors, and I'm going to show you how you can do that within private lending. Also, I want to show you and teach you these three components to helping private lending really perform and make your investments go completely out of the roof. I'm going to teach you arbitrage, hypothecation, and fractionalization. With those three components, you can actually take a private lending investment strategy and exponentially grow it into such a degree that your friends, your family are going to be amazed that you're able to do this. And I'm going to do this completely for free. Now, what do I get out of this? Well, number one, I hope that you share the podcast and you get this out to your family and friends. Number two, I hope that in the future, I'm actually working right now. This is the first video of many podcasts. But I am working right now on a training module that will help investors, actually a 1 to 2 day training stint that actually walks them through setting up their private lending, everything they need to do to, when they leave that 2-day event, go out and begin doing private loans confidently themselves. Number 3, I'm hoping that along the way, I meet investors that recognize my experience, that recognize that I've been there, done that. I've had the hits on the chin. I've battled those battles. I have weathered those battles, and that they see the value in collaborating with me, and they want to come on and invest in the fund. Ultimately, my goal is to teach people such as yourself, whether you're accredited or whether you're non-accredited, whether you're sophisticated today or whether you're just beginning the journey to becoming sophisticated. My goal is to help each and every one of you understand the power of private lending and how to implement it into your current investment strategy. And listen, just as I said, you have to go to our website, go to thesophisticatedinvestors.com, find this episode. It will be the very first episode, TSI, The Sophisticated Investor 000-Intro. Welcome to the world of private lending, or welcome to the world of The Sophisticated Investor. And in that episode, in the episode notes, you're going to find my free giveaway, my white paper called The Deception of Passive Income. I want you to download that, please. It's a free gift to you. It's not that many pages, but it really dives into the power and the diversification thought process of adding in private lending to your investment portfolio. Please subscribe to our podcast. Please subscribe to the YouTube channel. Follow us on Facebook. We don't have an Instagram. Don't really have that many photos right now to post. Follow us on Facebook. Reach out and connect with me. I'm more than willing to sit down and talk with people, any investor, no matter their stage, and explain what we're doing within our fund, or what we're doing within private lending, and how they can take their investments to the next level utilizing private lending. This is Edwin Epperson. Thank you so much. God bless, and we'll talk to you soon. And that wraps up our show for The Sophisticated Investor. Thank you so much for joining me and joining our guest today as we dove into the specific assets and the market that they invest in. Please join us again when we dive into more investing techniques and strategies in different assets within different markets, so that we can help you, the listener, and our community member build, protect, and preserve your family's generational wealth. This is Edwin Epperson, your host of The Sophisticated Investor. God bless, and have a great rest of your week.